Well, hello, everybody. Welcome to another Tactical Tuesday. We are here with some fantastic realtors from across the country. We are bringing them on one by one as we speak, and you may or may not know them, but I'll tell you what, every single one of these guys are people that when I'm buying a property, they are who I call. And it's not just because they're investors themselves, but they are. It's not just because they're going to dig through and find something that works for me, which they will, but it's because of who they are and how they treat people and the fact that they will tell me no if I need to hear no. So, welcome all of you guys. We've got a cross Canada view. So we've got everything from Edmonton, Calgary, uh, east of Toronto. So yes, there still are things that work in Ontario and all the way out to Halifax. So we are going to do a mini trial of speed dating. So a couple housekeeping items before we get going, guys. There's a couple of things we are clearing out Fearless. I don't know if you've noticed, but man, engagement is down. We are clearing out these babies. So if you are in Fearless and you want to stay in Fearless, there's going to be a post every day for the next 5 days. Comment, engage, do something to let us know that you are still here, that you still want to be here. And if not, we will be clearing out those that we are just bugging and that affect our stats of how far we get reach. So just so you know, we will be doing that. So if you see posts and you want to stick around, make sure to engage. Okay. We are going to jump into speed dating. So here's the deal. Now the bell depends. It kind of was working and it kind of wasn't. So I might just do it myself. We are going to do a bell. So every 6 minutes, and you're going to have to prod me though. Every 6 minutes, we will move to the next person. So I'm coming in and deliberately so eyes pretty well shut. I haven't seen the properties. I didn't want to see the properties. I wanted to be just like you, an investor looking at a new market and have the same confusion and excitement and questions that you would have. So to be honest, I did see one property, but that's it. One. And other than that, I am going and I try not even to look at it very long. So I'm just going in pretty eyes wide closed. So we're going to start with Calgary. So Rebecca, if you could just remove everybody else for us, and we're going to throw Corey and Colin right into the fray here, guys. Who's from Calgary that's on with us tonight? Let us know who is from Calgary or who's interested in investing in Calgary, because it's there's so much chatter out there about Calgary, about good, about bad. I've been following Calgary for 25 years because I know that what happens in Calgary is going to now happen in Edmonton. So it directly affects me. So I've been following Calgary forever and ever. I know the loops. I know how it works. And I know that having the right property and having a long-term view of it, there's so many people that have been successful in Calgary. Okay, so Red Door, Corey and Colin, welcome, guys.
Thank you. Thank you.
Hello.
We're ready. I'm going to hit
Hey.
start on my timer and share my screen.
You do that.
All right. Can you see my
All
screen?
right. We can. If there's any way to make it any bigger, that'd be amazing. But if not, I can even see it. So I'm sure others can.
Okay. So we've got a bungalow that's suited with a double detached garage in a good community in Calgary. It's a lake community, so you would have lake access as a homeowner. We're purchase price would be $649, 20% down for your typical residential investment property mortgage. We used a 4.1% interest rate. So that's a rate that we just recently were quoted. Typical legal costs for closing, $4,000 a month for rental income is what we're projecting. So that would be $2,500 for the suite upstairs and $1,500 for the suite downstairs. Tenants would have a utility split 60-40. So the upper tenants would pay 60, lower tenants would pay 40%. Mortgage payments on the property based on that purchase price would be 2,508. Taxes at 323 a month. Insurance rounded it up to 100. We expect 95 type thing a month for insurance. Nothing for utilities, as the tenants will be paying that. We went with 8% for property management, 3% for repairs and maintenance. This particular home has had a roof in 2016. Furnace was done in 2024, or sorry, serviced in 2024, and everything was good there. No issues with any of the mechanical. Obviously, we'd say, you should have an inspection on purchase just to make sure everything is good. But to us, it looks pretty solid. Your total cash required to close would be 132.8, including your legal costs for closing. And we're anticipating a cash flow of around 465 a month.
Okay.
We went with a little bit lower repairs and maintenance. I wish I could show you, but the interior, so it's just been renovated inside. So it's actually really nice. We looked at a few when we were trying to choose a property. And there's always some that need that renovation to be done, updating the upstairs, putting the suite in downstairs. And this one is actually completely turnkey. The suite is illegal in the basement suite. And so for some people I know, they'd rather be legal. However, with the grace period in Calgary, it actually presents a way to force equity because you're picking up something with an illegal suite, and likely with a few minor, adjustments, it can be legalized quite inexpensively. And so then you've got that legal suite too upon resale, which will increase the value. The detached garage right now, we've built it into the upstairs rent. However, I think, right now it's at 2,500 upstairs. You could maybe reduce it by 100, but then rent the garage out as a third stream for 250 or 300. So that would be a way to bring in another stream of income there. And I liked this property because of the lake community. I actually grew up in a subdivision not far away. It's deep south. I don't know if anyone knows Midnapore, but before 1954, it actually was its own town outside of Calgary. So, it's quite south. However, there's a lot more further south. So it just shows how much Calgary's expanded. This particular lot has 3 different, very nice outdoor spaces. So it would be ideal to sort of give upper tenants and lower tenants their own outside space. It's got a back alley and public transport right around there. Lots of schools, but lake communities are amazing for families. And a lot of times, to be able to rent the main floor just to get in is a really great opportunity. So this one was a winner, and we're like, geez, maybe we should go look at it.
Right?
Yeah.
I'm thinking that too. I'm like, okay, so you can easily, like, because I was going to ask you about the detached garage. I was going to say, so is there a reason you're not renting it separately? So if it can be done and it's possible, like, so you're looking at, pushing your cash flow to, let's say, $600 a month on the lower end. So
sometimes I find that if you include the garage with the main level, you'll get a longer staying tenant, just because a lot of people do like that garage. So I would play around with it and try it both ways, depending on the type of applicants you get. But there's definitely room for a few $100 extra, I would say, if you went the three income stream route.
Yep. And as far as the basement suites go, just to touch on that, when we talk about an illegal suite, it's a non-conforming suite. That doesn't mean it's illegal, like anything bad. It's just non-conforming. Calgary does have an amnesty period right now. So if you did want to update this suite, it was a pre-existing suite. So you should be able to go in and just bring it up to safety code, not full building code. So the requirements for that are a lot lower. So good opportunity to force a little bit of equity in by doing some work, and away you go.
Yeah, that's awesome to be able to. So it's going to naturally appreciate just because of that, but then also to be able to force it too. So that's awesome. I do have a question. So guys, if you have any questions, I see there are some people on from Calgary, so welcome guys. But even if you're not from Calgary, if you're thinking of investing in Calgary, okay, so my question is, why 8% PM property management? Why 8%?
That's about what it is here, 8 to 10%.
Okay.
if you took that out and self-managed, I mean, there's another, 8% in your pocket.
Yeah.
Yeah. And do you guys have property managers that do 8%?
Yes, we
Yep.
do.
Okay, so that's part of what you offer as part of the services you provide is contact and whatever connection with these property managers.
Absolutely, we could. Yeah, we can, we've got a Rolodex full of contacts for any investors looking to invest in Calgary that might be living elsewhere. In fact, our home brokerage has a property management division, so we have our fingers in there all the time. And
Yep.
As investors ourselves, we're constantly helping them improve their services, as we know it can be the bane sometimes of your portfolio.
Right. It's so true. Like good property management is make or break, right? So when you're looking in a city, if you're not from that city, I mean, huge is finding that property management. Okay, any questions, guys, that you have for these guys? Let me see here. Yeah, and if you want a copy of this analyzer, do let me know. Thank you, Nin, for that reminder. Do let us know. Just type in the chat that you would like a copy of the analyzer and we'll make sure to get that to you. So okay, so sorry, 1 second. I did see a question, but I missed it now. Got to get back into it. There we go. Okay, so this analyzer, I will say, what is the area like for tenant demographics? So you mentioned young families. So is that generally who we're going to rent to?
I would say a family on the main floor, potentially a couple or a single or roommate sort of downstairs. There's 2 bedrooms. So that's nicer, obviously lends itself to different demographics than just a single. But I don't know, in my experience, I don't know that I'd put a family up and down. It just becomes too many bodies on the property. So I would look for that differentiation. But you are walkable to schools. The lake, like I said, is an amazing, you pay $350 a year and you've got like year-round family fun that's free. So it's quite popular. As far as the community goes, there's a real mix. So you've got multifamily, you've got condos, you've got row houses, you've got detached, and then you also have like estate or luxury on the ridge, and the ridge is Fish Creek Park. So anyone familiar with Calgary, that also is an amazing area to be by. Tons of bike paths. So you're a little far south, but you're 2 seconds off of McLeod Trail. The access isn't terrible, and it's a very nice, mature community.
And I would say in terms of like demographic, you'd be in a B- to a B type tenant demographic would be kind of where I would expect to be in this community.
So we can expect them to stay for at least a good couple of years, 2 to 3 years in that kind of demographic. Probably not going to stay forever, but probably going to buy a house of their own.
You got it.
But going to kind of want to make this their home in the meantime.
Yep.
Yeah, and I think, before COVID, let's say, it might have been too far south for some people, but now with the ability to sort of work remotely, we find that people are preferring to live a little bit further from the core, just because lots are bigger, there's more family atmosphere.
Better access.
Yeah.
Yeah.
So, yeah, we just don't feel like.
I would think that that's a huge thing actually in Calgary, because I know if I lived in Calgary, I want to live close enough to get in and out of the mountains real quick.
Oh,
I know that for me, for sure. All right, so I'm getting messages, ding, 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 but it's not showing up on like the sound isn't coming through, but the ding is going. So we're speed dating properties tonight, guys. So that means that we are done. If there's any questions that you have, certainly type it in to the chat, and these guys will be checking. They're off to another event that they are presenting at, so we're gonna let them go. But in the meantime, we are going to have them check back later. And if you have any questions about Calgary's market, let us know. If you want a copy of that Proforma, Ali, you said that you couldn't see it very well. I get it. I can't see very much on small screens anyway either. So yeah, but we'll let you guys go. Thank you for bringing this property to us. And anyone who would like a copy of it, please just type in copy of Calgary and we'll make sure that you get your copy.
Thank
All right.
you.
For having
Yeah,
us.
cheers, guys. Yeah. See you later. All right, where should we go next? Let's do, okay, we did Alberta, so we're gonna do Stephen. Boom, there we are. All right, Stephen. So for those of you that don't know Stephen, this is Stephen Jones. He's from Blue Line Real Estate. He works in areas just east of Toronto. So Stephen's been an investor. How long you been an investor, Stephen?
I probably started when I was 23 and I'm much older than that now.
Oh, you're not going to confess. Hey, I don't blame you. Okay, so long time investor. You've invested across the country in different markets, so you get what it's like to be an out of town investor. You've also invested in your own area. You've been through some ups and downs across the country, so you're really a guy that has kind of a full view of what it's like to be an investor. And again, for those of you that are just joining us, I'll say this again, that these realtors, all of these guys are guys that I use myself. If I'm going to buy something in their area, I'm going to use them because I know they will also tell me what not to buy. And I think that's maybe sometimes more important than what to buy. So let's see. And you got Stephen's property here with us. There we go. All right. And if you're able to just bring that view up a little bit, that would be awesome. All right. So a 10-plex in Peterborough. All right. So guys, this is the first time I'm seeing this too. If you have any questions, throw them in the chat because I too will have questions just the same. All right. We absolutely will get you those copies, guys, for sure. Okay. And Thornhill, Ontario, we've got perfect. YVR, Ottawa. Let's see, copy of Calgary. You betcha. Okay, so we've got Peterborough. How far is that, Stephen, from Toronto? I'm
You can
useless
make it
that
in
way.
about an hour, and you're about an hour and 20 to the Toronto International Airport.
Nice.
Yeah.
Nice. Okay. So it's a 10-plex. It looks like it's in great shape. Looks really cute.
Yeah. Yeah.
Easy
No,
to find
it's
renters, I would think.
yeah, it's a good opportunity in Peterborough. And the reason I chose this, we work in Durham region and Peterborough, but sometimes the where is more important than the what. So
Mhm.
the where is located in Peterborough, as we mentioned, just over an hour away from the city of Toronto. There actually is people that do commute, either driving straight into Toronto or going to the GO Transit, which is the Ontario Transit that will take you into the hub.
Yep.
Um, and it's a lifestyle destination that's very stable regional hub that has a chronic shortage in housing. It
Mm,
has less than 1% vacancy, and that's why this one I wanted to bring you guys today. Record low vacancy. Lots of students have interest. There's lots of people that are looking to buy out there. It has four-season appeal. It's in the Kawartha Lakes area, which is comprised of 134 lakes. So
mm,
this one is 10-minute walk to the lake, to parks, to a whole bunch of recreation. It has seen over 100% growth in the last 10 years. And the reason I always like to use 10 years, we all know that over the last 3, 4 years, it's just been garbage. Nobody has the crystal ball to say what happened, where we're going right now, and anything like that. So when in doubt, zoom out, right? Zoom out a little bit
absolutely.
bigger to a different picture. And when you're talking about 10 years, it still has strong fundamental growth. 10 years ago, the average price was 315. Now it's 610. So there's great opportunity for investors to be a part of this area.
Mhm,
It's a prime downtown location, kind of like a walker's dream, convenient to
mm.
um, like lots of parks, recreation amenities. There's also, I don't know if you've heard of the high-speed train that we want to push right across southern Ontario into Montreal, possibly Quebec City. They're drawing a
That'd
graph
be cool.
actually going through Peterborough and then back down. They
Mm,
really want to make Peterborough part of this community. So the reason I just going through the numbers, super quick for the 6 minute here, you're looking at 1.799 million. And we have a mortgage payment of 6,874. Taxes are just over 2,000. Insurance is $1,345. And I just want to see our property management is four. And you're like,
Huh.
how do you get four? What's up with four? Well,
Yeah.
it just happens, obviously. Well, first of all, Ontario generally is a little more competitive on the property management. So on most properties, if they're just single detached or duplex properties, sorry, suited properties, you could be looking at 6 to 8% for those. And then just by the properties of scale, you're sitting around 4% on property. And this is 4% is the actual of what they're getting right now, but it is also typical of property management for this size. So there is a lot of demand. There is zero vacancy, 10 units. Uh,
Yeah.
it's about 15 to 20% under rented. So on tenant transition, you can go in and put a little bit of lipstick in there and increase the rents, thus increasing the cash flow as well.
Nice. And I like what you say about the long-term play. So this, diversifying our portfolios doesn't just mean market, but it also means types of investments. So some investments we go into for the cash flow and some investments we go into for the equity appreciation. And this would be one of those equity appreciation plays where you're covering your base, you've got some cash flow, but really what you're in it for is the fact that once vacancy goes down, you know that the next thing to happen is that housing prices are going to go up because the demand is showing that people want to be there. So, yeah, sorry, Ali's question, GO station, how close is it to the GO station?
The GO station, the closest spot would be Oshawa. Oshawa's a GO station as well as a VIA station, and VIA goes everywhere. So that's the main hub. So if you wanted to go to a GO station, you would go right down Highway 115, 35 onto the 401 to the Oshawa GO station. To answer your question, you're probably about 45 minutes to there. And then there is express trains that can take you right into the city for as little as 32 minutes after that.
Okay, so 45-minute drive, 32-minute or 30-minute into the city.
Yeah, we're finding that the community, I mean, unless you're stuck in blue collar, which I mean, I can respect that there is blue collar in Calgary and a lot of blue collar in Edmonton. It's not as prominent out here. So we have a lot of hybrid workers that have to go into the office 2 to 3 days a week, and they're willing to eat that drive for the lifestyle that they have of being near a quiet lake sort of community and things like that. Like they don't mind sort of doing the hour 20, hour 30-minute commute if it's only 2 to 3 days a week.
Yeah.
And
And that's
it
one thing
is the trains have Wi-Fi, they have everything there. It's relaxed sort of environment.
Nice. Yeah, it's such a difference because I remember when we came out to Toronto one time years ago, we were presenting properties, and one of the questions from the audience was something about like, well, what are you going to do about about rush hour and like the commutes and stuff? And we were like, yeah, you're right. The commute on this thing would be probably about 25-30 minutes. And the whole audience, the whole Toronto audience just looked at us. They're like, that is not a commute.
I was
Like
I
that.
was there. I was there
We're
in that exact moment when that happened.
no way.
That's traffic for you guys, and we just laugh at you. But that's the
Yeah.
advantage, like I said, of the train. My wife takes the train 4 to 5 days a week into the city from our place, and she actually gets a little bit of flex time, so she can bring her laptop and start her workday on the train, and then vice
Yep.
versa coming home. So they may only end up going in the office for 6 hours.
Yeah. Yeah. That's awesome. That's amazing. Okay, so and Andrea is saying hi, or Sean and Andrea are saying hi. They, those guys.
Hello.
Uh, okay, so if I'm looking at this property and I think, okay, so what product are you using for that's giving them a 4% 30-year 20% down mortgage?
So there's commercial opportunities. There's a lot more opportunities. It's not a necessarily considered rural. It's in a city. So we have a lot of lenders that are going to be offering that from a commercial side, as well as there's potential of working with CMHC. So whether bringing in efficiencies or one of the CMHC programs, I unfortunately did not have time to speak to an advisor on that, but there is a good chance you could possibly increase the amortization and decrease the down payment and as well the interest rate. So there's an option there that we'd have to look into further.
Okay, that's really cool. So that's why I asked the question is this something that perhaps could benefit from one of those programs? So whether that's the affordability or the green or whatever it might be, is that something that it could be? So that could, really change cash flow if you can amortize out a whole lot more. So yeah, pretty great. Okay, so and typically, is this a working class? Is this a family who's going to rent this? Is it going to be like it looks kind of like a senior's home to me? Am I just because I'm from a different part of the country?
No, it's a basically a long sort of apartment building. So it's a horizontal apartment, not like a linear apartment building. And there's one bedroom and all the rest are two bedrooms. But I'd like to say that it's students, but it isn't. It's mostly kind of like the owner occupied that want to rent. The tenants pay all the heat, the tenants pay all the hydro, the tenants pay all the water. You don't have to worry about, not being able to make those payments or not. But
Yeah,
with a vacancy of less than 1%, you can kind of pick whoever you want. So
yeah.
there's no necessary target audience, obviously, employed person, but there is people that want to stay here. So you do get long-term tenants in this area.
Mhm. I bet. And I remember when we were under 1% vacancy and it was crazy. We would have 25, 30 people lining up, and we don't have the population that you guys do out there. And
There's
we
a lineup of
literally would
people
have
trying to
nothing.
get into this building.
Is that right, eh? Nice. Awesome. And yeah, so anyone who wants a copy of this performa, you can get a hold of Stephen, Blue Line Real Estate. You can get a hold of Corey and Colin for the last one, also Red Door Real Estate in Calgary. Or you can put it in here and we will send you the copy of their performa. So I don't know if you can hear this, but that's our bell. You didn't even hear it, eh? Did it come through the sound?
No.
No, yeah, dang it. Yeah, so okay, perfect. Heidi, we will get you a copy of that for sure. Hydro is gas. So yeah, that's what they call it out there out east.
No,
So
no, hydro's electricity.
oh, electricity. Oh, sorry.
Yes. Yeah.
Ah, look at that. That's so funny. I don't know if I've always called it gas. That's so funny. Hydro is electricity. Okay, there you go. Heidi will absolutely get that out to you, and you can contact Stephen at Blue Line Real Estate. What's the best way to catch you, Stephen?
Just through the email. I'm sure you'll have it attached. Yeah.
Okay,
So
sounds great.
Steven at bluelinerealestategroup.com.
Perfect. Stephen's a great guy. If you're Heidi, if you don't know him already, he's a great guy just to connect with. And the beautiful thing about working with realtors that have been around for such a long time, both as investors and realtors, is they have these pocket listings. Now, I don't know if this one is or not, but certainly these guys are connected to a lot of investors. And so if you have something in mind that you're looking for, they can go out and go shopping specifically for you and not on the market, not what's already there. So
We always have pocket listings. Thank
you
you,
always
Tim.
have pocket.
Thank you.
Yeah. Thanks, Stephen. Okay. Take care. Eh? Say hi to the fam.
Will do.
All right. All right, guys. Let's see how we doing. Not too bad. All right, let's grab Drew. We're coming back to Alberta. Here we go. Drew from AOF team. You are in Edmonton.
Yes.
Yes. So interestingly, Drew and I, we cannot get rid of each other. So we met years ago when what like 2000, I don't know, when would that have been?
Probably like 2009, 2008, 2009.
2009. Okay. Yeah, crazy. So
Tiffany
2009,
used to challenge me on my JV presentations. I love
right?
this. Yeah.
It's crazy, right? It'd be like, all right, Drew, you're up. You're doing a whatever, a fake interview. Let's go. Present us a deal. Yeah, pretty awesome stuff.
Yeah.
And then things changed and roles switched where Drew became, he was first our client. We then became his client. So, yeah, pretty cool how the world works. And again, those long-term relationships, they're so important. So, okay, Drew, what do you got for us? You've got a property here in Edmonton, or close to Edmonton, I should say.
Close to Edmonton, a property in Leduc. I'm just going to share my screen here. That come up?
Yeah, there we go. Sweet.
Okay. Okay, so
So why Leduc and not Edmonton?
why Leduc and not Edmonton? It just so happens that this is one of those pocket listings that you were referring to. And the reason I like Leduc is everybody thinks Leduc is just oil and gas. Everybody thinks that Leduc is all blue collar, but things are really changing in Leduc. When gas and oil and gas kind of hit a stalemate in 2015 and things kind of dropped off the end of the world, everybody in the area decided it was time to diversify. And
Yep.
Nisku, which is just north of Leduc, is a major employment hub in the area, and it employs over 30,000 people every day. So when manufacturing plants and big warehouses started clearing out and there was a mass exodus because the oil field didn't need these people anymore, they started repurposing the buildings, and logistics companies started coming in, and food manufacturing companies started coming in, and like sports complexes in the area started changing the use of these buildings. And now they employ people from all walks of life. So Leduc just happens to be right in the hub. It's the last major center before on Highway 2 before you get to Red Deer. So between Edmonton and Red Deer. Excuse me.
Yep.
And
5 minutes from the airport,
yeah,
really.
5 minutes
So
from the
even
airport.
yeah.
And you've got agriculture to the south and the east. You've got the airport to the west. You've got Nisku to the north. Major employment hub. Now, the other thing I love about Leduc is it's very family friendly. It's very much a blue collar, young family type of place. But again, just good, diverse economy. And you've got all the big city amenities, but you've got the smaller center prices. Leduc is about a population of about 40,000 people. And the reason I like this house is this is a single family suited house, similar to the one that Colin and Corny were talking about in Calgary. This is a 2019 build. It's just about 1,600 square feet. You're getting 2,345 for rent upstairs. You're getting 1,495 for rent in the basement. These are going to have, good blue collar tenants. They're going to stick around for a couple of years. It's 2019 build and fairly contemporary construction. So you've got quartz countertops, you've got luxury vinyl plank flooring, all the common modern amenities.
Like that's going to attract that young family that wants to live there. It's not carpet, and it's a little bit more modern, something they can still be proud of, even though they don't own yet.
Absolutely. And Leduc is really a big renting center. There's a lot of people who rent in Leduc. They just like the flexibility of it.
I know I've had lots of property in Leduc for many years, and I find that a lot don't plan to ever stay. So they're like, we want to be close to the airport. We want a place where our kids can thrive in sports. We want, work close by. We want that high income, but we certainly don't, plan to live here forever. We want to go back to, Newfoundland or even BC, Ontario. So you get this really high echelon of tenant and demographic income wise, even, but they don't plan to stay. However, I've had renters, like right now, one of my places probably has been rented to, over the last 15 years, only 2 different people. And another one, I'm going to say maybe 3 people over the last 15 years. People don't move. They end up staying longer than they wanted to probably, but they stay a long time and they take care of the place like it's their own, because it is by then.
And it's funny you mentioned that because in Leduc specifically, it seems like people really do stick around Leduc for a long time. People that grew up there don't really want to buy, but they do stick around Leduc forever.
Yeah, it really seems that way for sure. Okay, so a couple questions for you about your pro forma. So I'm gonna say that generally speaking, I know Edmonton to be about 10% property management. You've got 8% here. How are you able to do that? So I know you guys are well connected. I'm sure that there's a reason. So tell me your reason.
There is a shift going on with property management where 8% is becoming more common. But
Okay.
AOF also has an in-house property management company called AOF Property Solutions, and that is in fact what they charge is 8%.
Oh, good
Yeah,
to know. So that's in-house even. So you've got the realtor and the property management on the same team and
absolutely.
probably working together to make sure that each other is a success, right?
Absolutely.
Yeah.
A
Because
client is a
sometimes if you
client.
refer a client is a client, yeah. And if you refer out to a different property management company, they do a bad job, that makes you look bad as a realtor. If your property manager refers a realtor and the realtor does a bad job, it makes the property manager look bad. So the fact that you both have this guided and shared interest, really interesting. I didn't know that. So that's really cool to know.
Yeah, new development.
Okay, awesome. Yeah, and I'm sure you guys are running it like everything else and like a well-oiled machine. So Um, okay, so also vacancy 2% and then your growth at 5%. So vacancy 2%, is that what we're seeing in Leduc right now?
Yeah, I would say in Edmonton in general, the greater Edmonton area, we're seeing probably like just over 3.5%. But again, that's lumping in all properties, all property types. And the ones that present better, the ones that are, cleaner, more updated, those ones seem to rent more quickly than the ones that obviously need work and people kind of take them as a last resort if they need to, not because they want to, kind of thing. And I would
Yeah.
say the property management company that's running it probably has less than a 2%, but just to put something in there to manage expectations.
Yeah. And the reason I bring that up is because we hear a lot about like I get a lot of questions. People know I'm from Edmonton, so I hear a lot of questions about the vacancy rate. Oh, I hear we're at like 6 or 7 or 8% vacancy. And yes, in a certain product, I believe it. Like I haven't actually seen that myself, but in a certain product in certain areas right now, there's such a influx of these new builds and these eightplexes, sixplexes, and it's a certain type of product in a certain type of area. Absolutely, I can see it being, in that range. But in the outlying areas, I know from my own portfolio, I know that these properties are definitely in it's a different gauge. So, certainly ask your realtor. Put them to the task. Ask them, why are you saying this when what I'm hearing is this? Don't be shy about asking. A good realtor is going to know the answer and is going to be able to answer intelligently and with proof as to why they're putting things like 2% vacancy when we're hearing that there might be 6% or whatever it might be. Okay, what else did I ask about? That's
I guess
me. Yeah, go
for
ahead.
financing, this is going to be a traditional residential mortgage, just over 4%, 30-year amortization, 20% down because it's an investment. This one, I mentioned that it was a pocket listing, and the window is closing on this one. We're actually going to be putting it on the market next week, which is interesting,
Yeah.
just to hit
Okay.
the spring market. But yeah, and it will likely go on to the open market for more than 500,000.
Yeah. Okay. So again, if you're working with a realtor that is in investment circles, they are going to any circle really, but when we're looking at investment, we want an investor realtor that knows other investors, right? We want them to be very well connected. Drew's been an investor since 2009. All of his team are investors. They all are all over the place. AOF team, you've probably seen them before. So they're well connected and they get these listings that don't hit the market. So this isn't even on the market. If you want an MLS and you wanted to buy this property, you could not buy it. And that's the beauty of having these exclusive or pocket listings, is you do get that kind of in ahead of the market. So if anybody wants a copy of this one as well, throw it in the chat and we will make sure that you get it. Drew, also, how can they contact you?
Drew at aofteam.com, or you can reach out to the team at aofteam.com.
Sweet. Perfect. All right. So I think that's all my questions, but we see again, this is a long-term hold. These aren't quick, short plays. Yeah, Drew at AOF team. So AOF team, just so you know. I see a typo in there, just FYI.
Oh, thank you.
Okay. No, sorry, it's not your typo. It's our typo.
Gotcha.
Yeah. Okay, guys. Well, thanks, Drew. Thanks always for showing up, as always. And yeah, appreciate what you bring.
Thank you for having me.
Yeah, you're very welcome. All right, let's go to Halifax. Actually, I do want to come to Halifax. I love Halifax. For those of you who've never been there, it's an amazing spot. Let's talk to Richie. There we go. Thanks, Rebecca. Richie, how's it going?
Good. Thank you so much for having me, Tiffany. It's so nice to be back.
It's been a while. I miss
Yeah.
you guys. Yeah. But we hear about you lots because we hear about the stuff that you guys are doing, and so many of our Ignited members use you as their realtor and have nothing but good things to say. So, but we do miss you in Ignited. It's been a hot minute, but yeah, good to see you.
Yeah, thank you so much for having me.
All right, so Halifax. Now, I know Halifax, I remember when Halifax properties were $64,000, and it's not really that way anymore. It's a little bit different, hey?
Yeah, for sure. So the HRM market has really taken off. Our average cost per door in HRM for a multi is about 320,000. So it's quite high. So and once you get out of the HRM, we go into the secondary or the tertiary markets. That cost per door comes down quite a bit. So in some areas, we can still find maybe 100,000 per door. That's still attainable, but HRM, no, the average is over 300,000. So it's more of a appreciation, long-term gain, whereas the outside areas, secondary, tertiary markets would be more of a cash flow strategy.
Still more cash flow, hey? Okay,
Mhm.
right on. And the nice thing is the population still keeps pouring in the door. So every time I
Yes.
look, I always check out Halifax's population, and population is always growing. It's always on the up, so that's always a good thing. But that's what drives the price, of course. So what
Mhm.
did you bring for us today? What kind of property do you have
Yeah. So
out
I
there
am going
today?
to share my screen. Can you see the
You bet.
screen? Great.
Yeah, you
Okay.
bet.
So I wanted to present, this is an off-market deal, right outside of Halifax in a area called Timberley. So for those of you that might be familiar with the Halifax area, Timberley is just outside the peninsula on the west side. It's known for a more new kind of up and coming new residential area. So
Okay.
one thing about Timberley is there's one of the nicest golf courses in Nova Scotia called the Links of Brunello. So it's a very a bit of a higher class, very nice golf course. So this is a quite new community right outside of Halifax, in about 3 kilometers to the Links of Brunello golf course. So a purpose-built fourplex in Timberley, and this is only 2 years old. Yeah, so
Nice.
it is it's completely turnkey in the sense that it's completely rented with fixed term leases, and all the tenants really enjoy staying here, and yeah, they want to continue staying. So right now it's a 4 unit. The two upper units are 4 bed, 2.5 bath units. And both of those units are right now currently bringing in $3,150 a month. And
Wow,
then we
nice.
have,
That's
yeah,
incredible. And
so
these
for
are
Halifax,
4 bedroom units.
yes, 4 bedroom, 2.5. And
Wow.
two-bedroom, one-bath units are currently getting, one is getting 2,300 and the other is getting 2,200 per month. And
Wow.
the good thing about this purpose-built fourplex is the income to expense ratio. That's what I like to focus on, is quite low. So as a homeowner, the expenses, really, there's only the water bill to take care of, and of course, insurance. But electricity is on the tenants. Snow removal is also on the tenants. And there's uh, very little to almost no grass. And the lawn care is also shifted over to the tenant's responsibility as well. So
And that's the difference between a purpose-built rental, right? A purpose-built rental that they know that when I'm going to rent these things out, I'm going to put in a lot of concrete, and I don't have to worry
exactly.
about grass. Snow might be an issue, but so who's
Yes.
renting this, Richie? Who's renting? Who's
Yeah,
paying
so
3,100 for?
the current tenants are young professionals. So
Okay.
on the four bed, 2.5 bath units for both units, it's four adults, four friends in each side actually. And
Okay.
then the bottom unit on one side there's a couple, and then on the other side there's a mom and daughter. Yes, a couple
Okay. And
as
what,
well.
so young professionals,
Mhm.
young, so where are they working? How far do they go for work?
Yes, so both of the young professionals, actually work in the on the peninsula in Halifax. So they
Okay.
do the 15-minute drive into downtown Halifax.
15?
Yeah, yeah, it's about
Yeah.
15 to 20 minutes onto the
Okay.
peninsula. Yeah.
Yeah. Nice.
Yes.
Awesome.
So I'll just go through the numbers quickly. And what I like to do as a more of an investor-focused realtor is I really focus on underwriting, not as a realtor, but I like to wear like as a investor, and kind of through the if how a mortgage broker would look at the underwriting. So I try to be as conservative as possible. So all the expenses are normalized. So I don't know if some of you are familiar with how the property taxes and work in Nova Scotia, but once you purchase a property, they get reassessed, and the province wants their tax money right away. It gets reassessed.
Right.
So this tax is based on the purchase price of 1.575 million. So the monthly tax of 1,463 is based on the 1.115% property tax for this area. So
Gotcha.
that's not what the current owner is paying, but that's a normalized taxes.
Awesome.
Same with the insurance. We've normalized that to $100 per unit. Utilities, that's the water bill for 1 month. Property management at 8%. That's normal for Nova Scotia. Repair
Okay.
maintenance, this is a bit lower. I've used the $550 per unit per year. Although this is only 2 years old, everything is still new.
Yeah,
I don't
that makes
think,
a difference.
yes. So again, trying to be as conservative as possible. Vacancy rate in Halifax is actually closer to 2%. But
Okay.
a mortgage broker wouldn't underwrite this at 2%. They'll probably use 5. So more as a stress test, I use 5% in the numbers. And
Fantastic.
another thing, what I always recommend to my clients is to always keep a CapEx reserve fund. Although this is only 2 years old, I still put in about $250 to set aside every month in the
And just
expense.
explain what CapEx is.
Yeah, so capital expenditure. So these are big ticket items where as an owner, you would have to pay for. So it's not your regular repair and maintenance, like calling in a plumber or fixing an appliance. This is more of replacing a window or a roof or something structural out of the ordinary. But
Big ticket
even though,
stuff.
yeah, even though it's a new build, I always recommend my clients to set aside a little bit of a reserve fund.
Yeah, right on. I have a
Yeah.
question about the layout here. So I just
Yep.
see development opportunities. So is there an opportunity to put in, like, that looks like a huge piece of land sitting there. Is there opportunity to put in, I mean, either another building on there or even just a, garage with suites above or anything like that? Is the zoning open to that? Or is there any opportunities for forced appreciation that way?
Yes, that's a good question, Tiffany. In this case, the builder maximized every every inch of the area, so
Okay.
it's pretty maxed out. Although the zoning is very supportive of more densification in the area. For this particular lot, it's maxed out.
Okay. Yeah, I
Yeah,
was
so
thinking
there's
about like what even for garages and then renting those out separately.
yes,
Yeah.
yeah,
Okay.
yes. Unfortunately, for this one in particular, there isn't
Yeah.
much more space.
Well, it sounds like the whole area though is kind of a great spot.
Hmm.
And yeah, I do have someone who's been asking about Halifax recently, so I'll have to send them your
Yes.
way. 15 minutes outside of Halifax. It's not far. Like
Yeah.
that's pretty
Oh no,
fantastic.
not at all. Yeah. So
Yeah.
that's what's appealing about Timberley is the location.
Okay.
Yeah. So in terms of the financing, this would fall under a residential mortgage. So 20% down. Our current interest rate is not 4.25. It's closer to 4%. Again, as a stress test to be more conservative, I use 4.25 for my numbers.
Nice.
So in
Nice.
terms of cash flow, for me in HRM, I think it's a huge win if it's self-sustaining. Again, for properties in Halifax, HRM, I think the game is if it self-sustains itself, that's a huge plus, and then there's that appreciation going forward.
And so it's a long-term play. It's a
That's
long-term
right.
hold. You're not going into this thinking you're going to live off the cash flow. You're not going into this thinking you're going to sell in 2 years. You're going into this thinking I'm going to have this, fairly new building that has good tenants, is close to an expanding market, and I'm going to hold this for quite a while. 10 years is a beautiful plan. No one likes to hear that, but it is. And so this would be one of those diversifying into the longer term kind of properties. Yeah. Okay. Awesome. So, and I know if anyone wants a copy of this pro forma as well, we can provide it for you. If you just type it in the chat, you're welcome to put, yep, me please, Nova Scotia or whatever it might be, Halifax, Timberley. And if you want to get a hold of Richie, how do we get a hold of you, Richie?
Yeah, email would be best. It is my email address is on my performa. It's rsuzuki@pressrealty.ca.
Perfect. Awesome. All right. Well, thank you so much. I'm just going to bring
Thank you.
everybody else back on here too. Actually, do you mind stopping the share that you've got going on? I'm not
Of
sure if I
course.
can or not. But we'll just bring everybody else back on and we'll say a quick goodbye. So guys, we had across the country today, we didn't have BC, but we had pockets of Ontario. Yes, there are still awesome opportunities in Ontario. We had Halifax. Again, a lot of people are like, "Oh, Halifax is done." Well, it's not. It's not done. You just have to have the right connections. Edmonton. Everyone's talking about Edmonton again. It seems to be one of those markets that goes like, whew, 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 whew. And we know that. I've been investing here for 25 years. It's one of those markets that go up and down for sure. It's a long-term play. Calgary also came on, so if you guys want any of your contacts that you didn't catch, reach out to these guys. Really, they will tell you, and this is so important, they will tell you what not to buy, probably before they can tell you what to buy. And it's really important to have somebody that's going to say, you know what, not a good idea, and here's why, but let me go shopping for you. And it's going to take some time. I might have to take a few weeks to do this for you, but I'd rather see you do that than buy something wrong. And that's huge to have on your team. So thank you guys. Thank you all for joining us. Really appreciate it. You did awesome. And yeah, we'll be in touch. And thank you for being who you are. Cheers.
Thanks, Tiff.
Yeah.
Thank
See ya.
you.
Takes a